Now, financial consultant Charles Mensah warned the Securities and Exchange Commission to tread cautiously over the planned cleanup of the sector. Now, this follows report that the regulator would soon move to deal with firms, the troubled ones actually. Earlier on, I tried to get some assessment of the situation, and here is a report. The action from the regulator, we understand, will now happen earlier than we initially thought. This is because the expected funding for the exercise have finally been secured. Sources say those affected institutions have also been given enough time to try and deal with their challenges. But Mr. Charles Mensah tells Joy Business clients of these institutions shouldn't be made worse off after regulatory action.
If it's, that's what I prefix it, if it's refund of our monies locked up, everybody will be happy, especially going to Christmas. Everybody will be happy, especially those who are getting near their pensions and they want to be dependent, because I have friends who are near pensions and they had invested in some of these companies. They will be so happy. But I pray that we wouldn't have any new company because coming to join them. Because why would one of those companies come again have their licenses withdrawn? Because the SEC did a good job by publicizing, by withdrawing those licenses. So we've passed to that stage. If a new company comes in, you can't tell me that within the last couple of months, that first license were withdrawn, another thing had happened. That means that either SEC didn't do a good job in highlighting those things, or there's a sudden industry attack for that particular sector that family had lent money to. And that's why maybe they are going down. But anything short of that, we should more encourage the refunds of people's investment and to bring confidence, to add on to the confidence that the banking sector have created. And then together we can have a good Christmas and a good foundation for 2020.
From what we are learning, about 60 firms could be affected by this regulatory cleanup. But the warning is that the Securities and Exchange Commission should take some lessons from the banking sector cleanup. Let's though stay in the financial sector because commercial banks could soon be asked to capture Bank of Ghana fines in their financial statement. Now, the move as part of measures took by the regulatory sanctions to actually deal with recalcitrant banks. Now, there is more in the following Business Desk report.
The proposal is part of several reforms that the Bank of Ghana is working on to sanitize the banking industry. Sources say the move has also been influenced by the fact that some commercial banks continue to flout the central bank's regulations because they believe they can afford to pay these fines. But Joy Business now understands that the Bank of Ghana wants to compel these banks capture these fines in their financials. It is believed that if shareholders come to appreciate the real cost of these actions of their directors, they will take steps to deal with it internally. Joy Business is also learning that some of these fines can even be used to pay shareholders dividend and finance some activities of the banks. It is expected that when this initiative materializes, it will help improve regulations in the banking sector.
Well, if you just join us, this is Marketplace, the program that talks about the big business issues and the news in town. We'll take a short break and we'll be right back. Welcome back to Marketplace. And Bank Board has actually named the current Executive Director and Chief Finance Officer, Philip Oredu, as successor to the current Managing Director, that is Frank Edu. He is expected to formally take over in January next year when Mr. Edu finally retires from the bank, that is by the end of December. Now, basically, you're trying to do to ensure that there's actually a mechanism in place to ensure that the rollover doesn't become that challenging for them. Now, we understand, has worked with the bank for quite a long time. He's also served in very significant positions as well. Upon the approval, Mr. Redu will assume the Chief Executive Officer position, that is on January 1, 2020, following the retirement of the current Managing Director, that is Frank Edu, on December 31, 2019. Now, Mr. Redu comes with the board with a wealth of experience in banking spanning over 15 years across the corporate banking, retail banking, structure and project finance, credit finance, and treasury. Mr. Redu also joined Cow Bank in 2004 as financial controller. Now, prior to that, he was a senior manager at KPMG Ghana, leading the firm that is as a chartered accountant, management consultant, and tax advisors. He's a fellow and member of the Association of Chartered Certified Accountants, and also has a passion for growth of the bank. That is a footprint. Mr. Redu has made significant contribution to the expansion of the bank since 2004. He has been an instrumental player in the bank's solid track record in terms of sterling performance. Now, in addition to that, the current managing director, Frank Edu, and other two long-serving executive directors of the bank, that is Malcolm Prow and also Dr. Kobna Kwanzaa, will also be retiring on December 31, 2019. Some interesting development there when it comes to Cow Bank and the change in leadership and what we all look forward to expect from the bank going forward to next year. Let's say in the banking industry, because as Ghana set aside this year as the year of return, it provides an opportunity to examine how much Ghanaians abroad are sending back home to their relatives. Philip Namfuru's report here, voiced by Karen Dodo.
Expecting money from your relatives abroad is always something we look forward to. That pride that comes with holding foreign currency, such as the United States dollar or the pound sterling. Remittances are important parts of economies around the world. They are described as transfers of income between family members. According to the World Bank data, globally, remittance inflows as of 2018 reached a value of over $682 billion. In low-income countries, total remittance inflows stood at over $526 billion for the same year. But what about our homeland Ghana? According to the same World Bank data on remittance inflows, as of October 2019, it showed that Ghana had the following over the 4-year period, 2015 to 2018. In 2015, Ghana recorded a remittance inflow of $4.9 billion. The 2016 figure dropped significantly to $2.9 billion. This some may attribute to the global slowdown in the world economy. In 2017 and 2018, the remittance inflows reached $3.5 billion. Remittances are an important funding source as these will largely sit in the banks and contribute to the pool of funds. As we move towards a Ghana beyond aid, leveraging on remittances is a step in the right direction, but if the income of our family members are affected, then the numbers will dip, and as a nation, our chances are limited. But for individuals, it still represents a good source of funding away from the cost of traditional banking loans. Well, I'm looking forward to my share. What about you?
Of course, indeed, you're looking forward to our share as well from remittances coming from outside. Manufacturing giant Unilever has seen its financial fortunes decline sharply the first 9 months of this year. Now, this was after recorded a 48 million cedi loss for the third quarter of this year. Could this Unilever's performance be a reflection of challenging times facing the entire manufacturing sector? We'll be getting some deep analysis and some understanding and what is causing this from my colleague Philip Namfuru, who's here with me in the studio for us to talk about this. And interesting, because Unilever warned us about this.
Indeed they did.
It's about somebody telling us that, okay, don't expect anything from me this Christmas. And Christmas comes and it doesn't give me anything. So they warned us about a challenging times for them, and now it has happened. 48 million cedi loss for a giant like Unilever. What was the problem?
Okay, so Unilever Ghana is part of a global brand, Unilever. They are producers and retailers of consumable goods, retail goods. Now, earlier on, sometime during this year, Unilever Ghana came out with a communique telling us that, telling us that there are some challenges within the manufacturing industry and their own high inventory levels, which I'll explain later. And as such, it may take an effect or have an effect on their bottom line, on the financials. So going through their financials, specifically the comprehensive income for the period September 30th, ending September 30th. And we must note that these are unaudited financial statements.
But Philip, don't tell me that anything will change.
Oh, no. I mean,
the variations won't be that big, even when they are audited.
But then,
because these are done by internal auditors, per se.
Exactly.
Sorry, go ahead.
Yeah, but then we must disclose that these are unaudited. Till the auditors present a true and fair view. What we are going by is the unaudited statements. Okay. Now, if you look at the comprehensive income part of the financials, you realize that there was a dip in revenue by 23% when I did the calculation. Now, their cost of sales, which is the cost you incur to actually produce your goods and services, actually went down. But if you look at the margin by which the revenue went down, it seems to exceed the margin by which the cost of sales went down. So when you compute, you realize that gross profit had shrunk. That's the difference between the revenue and the cost of sales. Now, when you're coming down, you look at their expenses. For example, let me go to ones that we can relate with. Brand and marketing investment expenses actually came down.
Okay.
Administrative expenses, you would expect that it will shoot up, but it went up marginally from 47.2 million to just 47.5. So that's a marginal increase. Now, when you come down, you realize that, okay, so as a result of the shrinking in their gross profit and more or less like marginal increases in some of the line items of their expenses, when you strike their operating profit, I beg your pardon, you realize that they're in a loss. Anytime you're going to financial statement, you see brackets.
But in that earlier statement, they warned that some of their distributors are struggling to get their money from the bank. So in terms of them paying for these goods that they're giving to them, it's taking some time. And also with respect to the current economic environment, in terms of, it appears, and this is an unintelligent guess I'm making, that disposable incomes have been affected. So if, for instance, you're buying 2 packets of Pepsodent, you may be doing 1, you're also looking at other things as well. Those could be the real reasons for this problem, right?
And I like the tangent you've taken. Let me just quote something from their financials. And it says, the results reflect challenging trading conditions, as well as efforts to reduce high inventory levels in our distribution network, previously highlighted in our disclosure, which we have referred to. Now, let me explain what we mean by high inventory levels. It means that your company is struggling, more or less, to sell what they have produced. So when you have high inventory levels, it comes at a cost to keep those in the warehouse, to ensure it, to make sure that labor is making sure that all these things are well in place. So when you have a high inventory, all things being equal, it doesn't smell very good for you because you're in the business of producing to sell. So when you're keeping a lot, then it means that they're not selling anything, so they're not gaining.
Philip, I want to come to another thing, because when you look through the financials of these companies, and not just Unilever, I've seen others as well, the argument and the perception is that all these things are externalities. Now, if I look at their marketing and advertising budget, how is competition also hitting Unilever in terms of the fact that they have to step up pricing and all the rest? So you're putting in so much to produce the good, but when you bring it out, you are not making that good return on it, because you need to maybe cut down the price to push the product on the market. We know Guinness is also having some problems. You know, some of these multinationals who are manufacturing here, the counterfeit goods from the Far East and all the rest. From the numbers, do we get a sense that, okay, it is not just about externalities, but also competition is hitting hard at these firms?
Okay, so on the competition level, I'll speak based on anecdotal evidence. This is a brand that has been trusted over the years. And there are other brands coming from other parts of the world where they seem to compete, they are cheaper. We have the local factor in there where people easily relate to these and buy these. But when it comes to Unilever's financial specific, and I conducted what we call a vertical analysis. So you just take the revenue, strike it over something else. So let me use one for example. The admin expenses to revenue is just 13.8%. Not very high. It has even come down from their previous financial years when I checked their 2016-2017 financial years. If you take brand and marketing expenses as a share of revenue, it's just 8.6%. So it means that on the ratio of the expenses to revenue, they are managing.
Looking at it's quite high. I mean,
8%.
If marketing is taking,
it's arguable. 8% of your revenue. It is arguable, because you know how companies spend a lot on their brand and then investments, but largely the loss, as you mentioned, 48 million. One thing we need to add in here is that there was a jump in their finance cost, and by finance cost I mean the interest they are paying on their loans and etc. And all these factored into why Unilever experiences 48 million Ghana cedi loss.
Philip, we have to draw the curtain down on this, and it will not be just the end of it, because we're looking at what about other industries and also a reflection of the broader industry as well. And that was my colleague Philip Nafuri giving us some analysis on the issue with Unilever Ghana and what they are going through right now. Now, prices of some major commodities and foodstuffs would continue to decline on the market, and that's according to the latest report by commodity research firm Isoko. The report, however, showed that prices could be going up at the end of this month, and that is due to demand for food leading to the festive season. If you go through the report, interesting, and they actually gauge the farm gate prices, or prices at the major markets across the country. Now, if you even look at cassava, for instance, a bag 91 kilo in Accra is going for about 34 Ghana cedis. If you look at try to strike the change from the price being quoted this month and last month, that's about 5% change, of course. Let's look at cowpea as well, a bag of 109 kilogram. You can see that it's being sold in Accra around 500 Ghana cedis. Now, again, going through this data, it is clear that majority of the prices that is being sold on the market, or goods being sold on the market, are seeing some reduction. And some would say that what could be the reason and all those things and blah, blah. That is very interesting for you. So indeed, it looks like harvest has picked up, and that could be impacting on the prices of these commodities according to Isoko. A lot too soon, we have to draw the curtain down on this program Marketplace. My name is George Uafe. And it's lunchtime. Let's catch up somewhere in the capital to talk. Good day.